All right, everyone, welcome to our This Week in Crypto call for October 7th, 2022. It's been a very calm week with not a lot of movement up until about an hour and a half ago. And this is expected because there was something known as the NFP report that came out today in the United States. This is the non-farm payroll data report, which lets everyone know exactly how much the payrolls of non-farm occupations have gone up or down, how many new jobs were created, and just the overall payroll within the United States and how it's looking right now. This is, of course, very sensitive right now, considering the uncertainty of the US economy, where things will go from here. Obviously, CPI reports have been all over the place in 2022, which have caused a lot of havoc and inconsistency in the market, mostly toward the downside. So people were looking for a potentially positive non-farm payroll report, and that actually is, for the most part, what we have seen. And that's interesting because markets have dropped pretty substantially uh, ever since this report came out. But with a positive report, this could be more so due to simple uncertainty of how things will be reacting to it and people sort of sitting on the sidelines until things become clear. And often when that happens, there's a natural drop. Um, in terms of some of the details of what's come out in this NFP report, we've seen that the projection was a generation of 250,000 new jobs, and that payroll actually increased to 263,000. So it exceeded expectations by 13,000. The net revisions for the prior 2 months combined came to 11,000. In terms of the unemployment rate, um, the consensus was going to be 3.7%. It actually ended up being 3.5%. So that's a positive sign. Average hourly earnings grew on a month-to-month pace by 0.3%, which was the expected amount. And they were already ahead by 5% with a consensus of 5.1%. What does this all mean? It means that we had a slightly positive NFP report, which is very good. The Fed is, of course, trying to send interest rates higher. So seeing a positive NFP report puts a slight cog in their plan and makes it harder to justify continuing to increase interest rates. So overall, in theory, this should be a positive sign for cryptocurrency, but it's yet to be seen because we've talked about the correlation between the S&P and equities for quite a while now, and uh, it's always difficult to predict as to when they're going to break away from one another. I have this chart here. Let me make sure I can find it. This shows the last week in terms of the correlation between the S&P 500 here in blue and Bitcoin here in green. And we can very clearly see it's been a close uh, price movement between the two sectors, with obviously this big drop off today. And even though we can't see the blue yet because there's going to be about an hour lag on the S&P 500, and it only opened half an hour ago, the S&P 500 basically opened right around here as well. So the correlation is continuing, and until that changes, we need to see the S&P today to close out the week start to rise and show some positivity with this news, rather than just continue to stay plummeted like it has to open up the trading day. So if the S&P starts to recover and at least come back up here as people realize that the NFP report has been positive, good sign for Bitcoin and crypto in general. For now, though, as we can see here, price returns are mixed. And I can even switch over to just the 24-hour cycle to show you that before today, things were looking pretty good. But because of this NFP report and the overall drop that came right as it was released, it's been mostly a sea of red today, with Bitcoin down modest 2.5%, Ethereum down 3%. helium's down 7%. It's the biggest drop of the top 100 market cap assets. Not a lot of green on this chart here. But going back to the 7-day, we can see that there's been a mixed bag of results thus far. And we have Bitcoin and Ethereum both slightly in the positive. We had Matic as one of the big winners of the week. Elrond has been up as well. Maker has been up as well. These two were in double digits in terms of percentage returns over the past week. And then on the other end, we have Uniced Leo that had a big drop. Chili's, which was really thriving actually throughout August and September, it took a big drop. IOTA took a big drop. And it's been all over the place. And that's why fundamental data is so important and can really help us to navigate which projects to be in and out of when markets are so volatile as they are right now. And by the way, we have crypto news alerts with us. I didn't announce ahead of time because we were uncertain on the timing, but he is a friend of Santiment and someone who I've had the pleasure of speaking to over the past week. And he was very gracious in joining us for today's call. And I think if you'd like to introduce yourself, my friend, I'd love to have you sort of tell us a little bit about you and what your channel is all about.
Can you hear me loud and clear?
Sure can.
Awesome. Glad to hear that. First and foremost, good morning. It's good to see you and on the call and seeing what's going on in the market. Always a big fan of Santiment, seeing what's going on and the day-to-day on-chain metrics and the bigger macroeconomic landscape to get a better understanding of what's going on. So my name is JV. My name is Justin. People call me JV. I launched Crypto News Alerts podcast approximately 3 years ago. And the reason for that, I got into Bitcoin in 2017, transformed my life, and I've just become passionate, diehard, Bitcoiner, just because of what it represents. Same reason it probably attracts many of us, self-sovereignty, not being dependent upon the matrix and all this fun stuff. And so I found myself waking up every day and checking the news because there's so much going on in the crypto market and the crypto sphere. And I would spend like an hour just checking all the stories that would, be published of what's going on. And then I realized I was doing this every day. It became a routine. So I figured, why not launch a podcast and just separate all the most exciting things going on in the market and share that every day. And that's what I've been doing. I think I'm on episode like 1068 today or something like that.
Yeah, the amount of content that you release is super impressive. And I've checked out some of your videos in the past and been highly intrigued by what you have to say, especially considering your focus on real world events, which there are many of going on right now, and how they relate to market price fluctuations that impact crypto and equities and all these other things going on. And we were talking before this call about some of the big drivers of where prices are being hit or being impacted positively based on all of this news coming out. And I know you had a few topics you wanted to bring up. I'd love to get into them with you.
Yeah, I love to look at a bigger picture. I'm like a long-term hodler more so than like a day trader. So that's why I appreciate Santiment so much, because it gives me the opposite data that I need, that I don't have to complete my understanding of what's really going on right now. But I'm always so focused on the next halving because as we all know, these markets are cyclical, and every 4 years, there's a halving, which ultimately draws in a lot of liquidity. The market cap rises significantly, and as a result, the crypto prices rally. There was a halving in 2016, obviously. There was a halving in 2012. That was before my time. I got in early 2017. I think Bitcoin was roughly $1,500 in that ballpark.
Good old days.
I wrote up that cycle in 2017 from less than $2,000 all the way to 20. So that's like more than a 10x. And it's like, oh my God. So what I learned really fast, just being at the right place at the right time that year, is it's the year following the halving when the market goes absolutely parabolic. And then lo and behold, 4 years later, the same thing happens in 2021, literally 4 years after 2017, only instead of December, we peaked in November, right? We hit an all-time high. of roughly 70 grand, say 69K. So again, we went up this time from the previous all-time high of 2017. We 3.5x'd, went up 3.5 times what we were from the previous peak. So the first halving, we went up more than 5x just in a very short period of time. Then the second halving, we went up 3.5x, and many were saying maybe we're going to have extended cycles. Maybe the 4-year halving cycle is no longer going to be in play. And then we witnessed the big crash of 2022, where we saw prices plummet in financial markets around the world from a lot of fear-mongering, a lot of, war, a lot of, inflation, hyperinflation, and all the madness going on in our society right now. But I kind of feel like I don't necessarily feel we can break out of the current all-time high of 69,000 until the next Bitcoin halving, in my opinion. So I'm looking forward to the next halving. Obviously, it's in 2024. Some people say it could happen potentially a little sooner by a few weeks because the difficulty adjustment and all the things that are keep changing. The hash rate is typically, it keeps hitting a new all-time high. A lot of analysts believe that the price typically follows the hash rate, etc. Would you mind if I share my screen? Because I don't want to bore anyone.
Oh, yeah.
Looking at something stagnant. Let me see if I can.
It's highly interesting. Please do. Yeah. And, while you're getting that set up, I'll just say, by your theory, and many have this theory, the 2024 halving would generally have the big positive parabolic impact on markets in 2025. And the question that obviously arises is, when you have the mass group of crypto traders all believing that a specific time is when prices will go up, or another time when prices will go down, it's not always a perfect science, because there's sort of a self-fulfilling prophecy in crypto where if the crowd unanimously expects something, it is less likely to occur over time due to the predictability of it and the fact that crypto is a zero-sum game. So there have to be losing traders in 2025 and people who are actually FOMOing in at the top so that others can buy the bottoms. And the big question will be, how predictable will this be, with this being our fifth halving coming up in 2025?
Exactly. And can you see my screen now, or is it blocked because it asks for permission from my setting? I'm not sure if it's showing.
I see a desktop. Yeah.
Okay, cool. But you don't see my actual window that's open, the browser?
No, we just see the wallpaper. You can try, usually when you click on share screen, it gives a bunch of different options as to what to share.
Oh, so let me go back here as we're talking here and see if I could stop the sharing and re-switch screen or window. Here we go. This might do the trick. Switch the screen, and I can choose, let's see, do I click here?
Looks like it's shuffled to a new wallpaper, but we still see just wallpaper for now.
Okay. My apologies. Let's see, grid
view,
only participants together mode. But yeah, so anyway, I'll keep talking as I'm figuring it out. Ultimately, Stock the Flow and Plan B, who's the creator of the Bitcoin Stock the Flow model, I love his tweets. I share a lot of his stuff, and I know he's been getting a lot of flack because this year the markets didn't go as expected, but I feel that was more of like a macro black swan event, kind of like the COVID crisis in what was that, in 2020? No one was really expecting it. It crashed the market. Bitcoin jumps down to 3,300, providing everyone an opportunity of a lifetime. I kind of feel like that's where we are right now with the Stock the Flow. We do have another opportunity to pick up Bitcoin at the price it was 5 years ago.
Yeah, go figure.
So people are like, oh my God,
never ever get here again.
I'm just like, this is the perfect time to be stacking sats, knowing we were at this price back at the end of 2017. So it's like rewinding time, hopping into a time machine, going back in time and picking up the most valuable, viable asset, to ever exist, the hardest form of money to ever exist. And but anyways, Stock the Flow model is predicting a $100,000 six-figure Bitcoin price by 2024, 2025 in that area on his latest, updates. And he recently shared My forward guidance for the next 3 years, 2024 halving is coming with increased scarcity. And that's right. And it will pump the Bitcoin price just like we witnessed in the halving of 2012, 2016, and 2020. And obviously 2024 is now just 2 years away. So it's not like it's a far time out, from now. Speaker view, that's not right. Strange. I think it may be some sort of setting with permissions I have to mess with because it's not showing me an option to show these windows for some reason.
Well, how about we do this? You can send
send you the link. Okay. Let's see. Cool. Yeah, as I'm talking here, I'll just send you some links to pull up and we'll discuss them as we're pulling them up here.
Yeah, good deal.
Cool.
But yeah, I totally agree about the interesting polarization on the stock to flow Plan B postings that he's put out recently. It's funny how much people resonate with him when things are going well, and they're all like, oh yeah, stock to flow makes sense, prices naturally move up over time. And then suddenly things go south and they're like, this model is BS, it makes no sense, he's just spewing numbers with no backing.
Right.
But overall, I mean, the proof is in the pudding. He is a highly followed individual on Twitter for a reason, and he has a very data-backed model, which over time prices have stayed relatively close to it. And regardless of our viewers' opinions on where prices will go next, there's certainly some validity to the idea that being at the same prices we were back at the peak of 2017 means there is some opportunity here, whether this is the bottom or whether the bottom may occur after another 50% drop, as some people assume. It's really the wild, wild west right now, and it's up to you to really buy into other people's fear, which we'll get into later on this call. There is quite a bit of fear going on.
100%. Exactly. So I like stock to flow. I'm looking forward to the next halving. I'm not expecting Bitcoin to pull itself out of, the all-time high until 2024, 2025. I do expect 2025 to be the peak of the cycle halving. I just sent you maybe 4 or 5 links via Twitter Messenger. Maybe you can pull up. I'm looking at the screen now. So whatever you pull up, I'll just talk about. I just sent you some random stuff. I apologize if I sent it more than once.
All good. I'll pull up the DPC price model here. Yep.
Yeah, let's discuss this. This is another model based upon stock to flow and halving cycles. It stands for dynamic power cycle. And the peak date, I find predictions interesting when there's an exact date. Because we can all say Bitcoin is going to hit 100,000 because it absolutely will. But what year, particularly? So this particular model is very specific on the date. It says October 13th, 2025, which again is the year following the next halving, which is the year when the market goes parabolic based upon previous halvings. And it has a range projection between 110 and 350,000 with a $200,000 price target. I find this interesting because, like I said, stock to flow is showing us hitting the 6-figure price target at around this time too, 2024 to 2025. So just more reassurance that we can potentially see a 6-figure Bitcoin price, like realistically, by the time of the next halving.
Yeah, very interesting. It's going to be contested by many people, and in the end, that's kind of a good thing, right? If people are all on board with this, it means that the actual ability for Bitcoin to grow to these kind of price levels would be hindered by the fact that there's too much FOMO with not enough resistance. And there needs to be a certain amount of resistance and refusal that these kinds of prices can be reached in order for them actually to be reached, just like there was after you alluded to the Black Thursday event, which crashed Bitcoin a little over 50%. I think Ethereum went down over 70%. And everyone was like, there's no way prices can recover. COVID is the end of the world. It's been, this is an unprecedented event that is going to keep prices down for a long time. And then boom, only a year and a half later, we're hitting almost 70K with Bitcoin. And that's generally a perfect demonstration of what Santiment's mantra is, which is prices generally move in the direction of traders and hodlers' least expectation. And obviously, the expectation then was prices would continue to drop and drop and drop due to this unprecedented pandemic. And now, in 2022, the expectation was that these were all dip buy opportunities every time it crossed, below 50K, below 40K, below 30K, below 20K, where we're at now. And finally, it looks like there's a whole lot of capitulation going on, and weekends have mostly dropped out from what we've seen in our social data. So I guess the question to you would be, what do you believe a bottom can look like, and what kinds of theories do you have to back it up?
That's the $1 million question everyone asks as well. What is the bottom of this cycle? One theory is the bottom is already in at around, what was it, 17
and a half
17,
or so, yeah.
6. Exactly. So some people are like, it can't possibly go lower. The realized price and, the 200-week moving average, that's all sitting around 19, 20,000. They're just saying it's ultimately impossible. I have the mindset that anything is possible because we've already witnessed a lot of crazy things we never anticipated. So I think we can potentially hit a lower bottom of max pain. I covered a story yesterday, Willy Woo. He was showing some analytics on chain, and it showed like roughly 60% of Bitcoin hodlers are underwater. And for the past halving, if we were to repeat that, as they say, history doesn't always repeat, but it rhymes. We can expect a $10,000 max pain if this current supports don't hold and we continue breaking down. But the absolute, yeah, there we go. Max pain with Bitcoin supply underwater. That's the chart. That's a good one. This is a very good thread by Willy Woo, by the way. As he says here, past cycles bottom when approximately 6% of the coins traded below their purchase price. Will we do this again? I don't know, but the structure of this current market this time around is very different. And then he says, in this cycle, we aren't seeing any of the historic selling. It could be they are hedging on futures, and the OGs this time around are hedge funds from back in 2020. So, I mean, could we potentially drop 50% lower than the previous all-time high cycle of 20? It's possible. Do I think it's likely to happen this low? I would say more than likely, I don't think it's going to drop that low, but can I see Bitcoin dropping between a range of potentially $14,000 to $16,000? Absolutely. I personally don't think that the low is in right now because it's the market there's just so many macroeconomic factors that would just lead me to believe that something worse is going to happen before things can get better. And that's just my personal opinion.
Yeah, this is really cool, and obviously we're big fans of Willy ourselves. He's really a master at on-chain data and finding new ways to understand where we are in market cycles in creative ways that really aren't being looked at anywhere else. And this chart is very similar to one of our primary metrics, probably a top 3 metric on our site, which is MVRV. And we have a model that sort of shows what Willy is showing. What this does is it indicates, it's of course going to do a refresh. So generally what it's doing is it's measuring the amount of pain that is being felt by traders across multiple time frames. And it averages the time frames, whether it's 1, 7, 30, 90, 180, or 365 days. It takes the blended average of what the percentage drops or gains are by the average trader, and then gives it a value showing how close it is to being in a danger zone area, which means it's way overbought and there's a ton of FOMO because of the amount of average trading returns in the positive, or how undersold it is due to average trading returns being heavily in the negatives in terms of their returns. And right now, as you would expect, the short term is fairly neutral because of the week we've just had being pretty flat. But the mid and long term, if we look at like the 30 or 90 or 365 day timeframes, most assets have huge trader pain due to the losses that have been accumulating throughout 2022. And because of that, we're seeing a lot of semi-underbought, which is what these yellow-green bars are, or fully green underbought bars, which are these darker green bars here. And the closer these bars get to this dashed line, this would be a top 10% best opportunity zone out there historically. So, 0% would mean it's a completely average time. Anything above it means there's a closer and closer chance of it getting to an opportunity zone, which would be the ultimate time to buy based on other average traders' pain. And this kind of supports exactly what Willy Woo is putting out there. We can see this bar isn't quite up at the dashed line yet, but it's starting to get close. He's, of course, only focusing on Bitcoin, but the majority of the assets here, this is Bitcoin right here, by the way, showing semi-underbought. The majority of these assets are showing that they're around halfway, some even more than halfway, to a historically good opportunity zone. So I think that's really interesting.
Yeah, great data. I appreciate you sharing this. Makes perfect sense.
And we've got a few, like Maker is actually in the orange because it's had a very, very strong 30 days. Chili's has had a strong 30 days or so, even though it's been correcting. But you can see, Celsius obviously is a weird exception because it's in bankruptcy, but there are still rises and falls within Celsius. And if you're really bold, you can look at this and say, okay, it's quite underbought right now, Loopring as well, Scale. There's some opportunities out there where if you buy now, you're doing so at a much less risky time in history than usual due to other traders being, minus 15% in the last 30 days, minus 40% in the last 180 days, or even like minus 70 or 80% in the last 365 days for a lot of these assets still.
Exactly. And I almost feel like anything under $20,000 Bitcoin is probably a great long-term buy opportunity. And trying to time the bottom is not as easy as it sounds, just from someone who'd been in the game for a minute. It always sounds like perfect fairy tale, like, yeah, I'll just buy it at the very bottom. And when it hits the top, I'll sell it, rebuy back, triple my stat. It's like things don't always work that way. So I'm a big proponent of, DCA, dollar cost average, and just buy on the way down so you don't have any regrets, because when we do take off, it's probably going to be when everyone least expects it.
Exactly. And that last point brings up exactly what I was going to say. People don't quite realize that the bottom and the top aren't already set in stone for what the future holds. So in other words, let's say there's a lot of people, let's say a year from now, the bottom ends up being in February of 2023. That doesn't mean that right now, going toward the future, we will already have a predictor of February 2023 as the bottom. The crowd, based on how they feel at any given time, are the ones causing these bottoms and tops. This is Bitcoin and crypto in general is not a debt-backed or EPS-backed type of stock that has a company value to it. It is a sentiment-driven market sector, which ebbs and flows based on how fearful or how euphoric people are about these assets at any given time. And when we look at something like the overall amount of social volume over the last 3 months, and we see that more and more people are dropping out and showing less and less interest in Bitcoin, that's generally a good thing, because it indicates that there are less and less people who believe in crypto long term and are therefore not talking about it the way they were even back in July. And we could even back it up to like 1 year to include the all-time high that occurred in early November. And it should load in just a moment. And what it's going to show is there was, of course, peak discussion back here at the end of 2021. And as soon as prices started dropping, the amount of conversations started dropping as well. And you can see there was one big uptick here in April. I can't quite remember. I think it was kind of a huge buy the dip notion by the crowd. which generally means that the dip to buy is not here yet. Generally, when the markets start to, or traders start to not talk about buying the dip anymore, that's when the actual dip buy opportunities occur, as we saw here in late August, right? There was a dip buy opportunity right there that some people got in on, some people did not. But if you're someone who believes that 20K and below is a very good time to buy, there has to be enough of a crowd notion that sub 20K is not a good time to buy in order for enough trader pain to come for when it does go above 20K, if that makes sense.
Yeah, it makes perfect sense. And it's ironic how the market works that way, when everyone's claiming that, the bottom is in, the bottom is not in, and vice versa.
Yeah, I remember like in 2017, because that's around when I started getting into crypto as well, JV. There was this notion that we're all in this together, right? And we're all kind of waiting for Bitcoin to go up so we can have Lambos and spew rocket ship emojis all over the place. But what I've learned, and many have learned since, is this is not a collective like goal of us all being on the same page. There are people who are putting up massive shorts on any given minute on exchanges, and those are actually used as rocket fuel to pump up the price when they're liquidated. And on the other side of the spectrum, if everyone is unanimously long, that's providing rocket fuel for prices to drop off a cliff. So those contracts can be liquidated and prices can soar down until people stop being so gung-ho about prices going to the moon. So it goes both ways, and the sooner you can really tap into that mindset, the quicker you'll become a successful trader in crypto.
Yeah, it makes sense. And it almost seems the majority, like for example, in retail, are always going to have it wrong because they're all being misled by corrupt governments and, people at the top, and it all trickles down.
Yeah.
So everyone's saying one thing, I typically am going to expect the opposite.
Exactly. And for the most part, we are seeing a mostly negative sentiment right now, which is historically a good thing if you're a bull and you've patiently been waiting for prices to go up and you've hung on to your coins. It doesn't mean that as soon as the crowd gets negative, that same day or same week, things are going to start rebounding. But given enough time, if you have multiple weeks of negative sentiment and people saying Bitcoin's dead, crypto is no longer viable, that's generally when prices start to pop. And we can see right now, I just wanted to highlight, actually, sorry, that's the BNB chart. Let me bring up the buy the dip chart right here. We can see historically when these spikes occur for buying the dip, it generally means that people are still too greedy. And when prices actually pop up, like they did here in early August, you'll notice how buy the dip was actually really low. There weren't a lot of people that believed in a dip being bought right now as a good opportunity. So the big spikes, you can see generally prices go down afterwards. This one was flat, this one went down. These were interesting because prices did start to rise here. But, as soon as people said buy the dip here just yesterday or 2 days ago, prices have actually gone down since. So in general, the opposite tends to come true. And you can even see the same when you type in just buy or bought. Whoops, might help if I spell it correct. Buy or bought or sell or sold. And you compare the two together, put them on the same axis. And obviously right now, we're seeing the biggest spikes in sell that we've seen in what looks like about 3 weeks or so, 2.5 weeks. And that's because prices are dropping and everyone's going to go up, prices are going to fall, they're going to keep on falling. And generally that means that we're actually going to be okay, and prices, at least on average, are more likely to rebound from here. Whereas when you see these huge buy signals, look at what happened right at the peak of the buy signal. Huge plummet, and all of the mainstream crowd basically got fooled here. Same here, big buy spike, and then prices plummet. So this is the kind of stuff on Santiment we really love to look through because it can give a glimpse as to how greedy or fearful the crowd is at any given point, and then we can successfully be contrarians and bet against the crowd.
Exactly. And as we all know, September was historically and is historically, the most bearish month out of the year, followed by what is October, the most bullish month of the year. And a stat real quick, the average return for October is 28.4%. So based on that average, if Bitcoin did pump this month, we can expect potentially, based on previous years, $25,000 to $26,000 Bitcoin if we were to pump that 28% this month. However, obviously anything can happen. We're in our own uncharted territory right now,
Yeah, and to be devil's advocate, a lot of people point to historically good or bad months as having too small of a sample size to really gauge, right? Because we've got 14 years of crypto data now, maybe 13. And through that time, one huge October and one horrible September can massively skew those averages. And I'm not one to say that those averages don't matter. I think they do, because I think the timing of when people put in money, based on the tax season, based on payrolls, like even days of the week, Friday being a historically good day because that's when people get their paychecks and put money into crypto. I think there's truth to that, and it makes sense. But if you fall into the notion of, I must sell all of my crypto in September and then put it back in on October 1st, you may end up getting fooled or trapped in making a blanket decision too swiftly, if that makes sense, and then end up getting screwed over and buying at the top and selling at the bottom, which is what we all want to avoid.
Great example, because if everyone expects October, the opposite would occur,
exactly.
Right? The market maker is going to win at the end of the day. One interesting prediction I'd like to share, because there's not a lot of influencers or analysts who are predicting six figures before 2024, but there's a few people who are. Do you mind if I share that real quick?
Absolutely. Do you want to share the link with me, or do you want to try screen sharing again?
Just show this data and we'll just talk. I think works fine by me, because it's just all in my head right now. One analyst I cover recently, and I cover a lot, is Credible Crypto, and he says he's expecting at least $100,000 Bitcoin run up next year. He's saying more than likely it's going to be 150,000-ish, but he says it's not going to be 300,000-ish. So that's one analyst who was saying six figures before 2024, which I found interesting. Another analyst is not necessarily just an analyst, but Samson Mao. He's huge in our Bitcoin community. He's also running for mayor, a Bitcoin city over there in El Salvador, with Nayib Bukele and, with Max Kaiser and all them. And he's still calling for $100,000 this year, which I have to share because, again, not many influencers are going to have the balls to make a prediction, knowing that most predictions don't come true, first and foremost. But nonetheless, he went out on a limb and he said many times this year that he still believes that 100,000 is in play. And then we have Max Kaiser, one of the dudes who have been telling us about Bitcoin since 2011 via the Kaiser Report with his wife, Stacey Herbert. They relaunched their podcast recently, the Max and Stacey Show. And Max has said numerous times as well that 220,000 is still in play for this year. Now, granted, he said that last year as well, but when he says it, he means it. So there's not a lot of influencers or analysts calling for 100,000 plus Bitcoin this year or next, but there's three of them right there that are, which I just wanted to share.
Very interesting. Yeah. And I know about Credible Crypto in particular. I'm not as familiar with Samson now, but Credible Crypto, obviously 339,000 followers, I think I saw, has historically been spot on with many of his predictions. And it's nice, especially when he's in the minority and a lot of people are against his visions. That's when they're more likely to come true. So there's a lot of validity to what these historically correct opinions are saying right now.
Oh, sorry, I was muted. Exactly. I think there is a lot of credibility there. I'm going to send you one particular link just showing the history of the Bitcoin prices over the course of 2 to 5 years, and basically on a factor of 10x, which I just find very interesting. Let me private message it to you here. Maybe you can just pull that up. We can discuss this real quick. Boom. Should have it there.
Yep.
Cool. And it basically just shows in 2011, Bitcoin fell below 20 bucks. Wouldn't you have loved to have been in Bitcoin at that time?
Oh, yeah.
Imagine, though, if Michael Saylor was in, there'd just be no Bitcoin to buy. So I'm
This
grateful.
is true. Thank you, Michael, for taking your time getting into Bitcoin.
And then literally 4 years later, which is a halving cycle, ultimately, Bitcoin 10x's. It adds a zero, right? And goes from 20 bucks to $200. Then 2017, 2 years later, which is the year after the big halving of 2016 when the market went parabolic. So these are the lows. We fell to 2,000. The high was 20,000. The low was 2,000. And then 5 years later, 2022, I guess now that would be updated to 17,500, but just for the sake of easy round numbers. The bottom was at a factor of 10x higher. So based on these numbers, then we can project between the next 2 to 5 years, if history repeats, which doesn't necessarily mean it will, but if it did, based on these previous halving cycles, within the next 2 to 5 years, we can expect a $200,000 Bitcoin bottom. That gets me excited.
Yeah, this really puts things into context. It's obviously not a perfect science because we're going up 4 years, up 2 years, and then up 5 years here. But either way, it shows in general, if you've been in crypto for the last 11, 12 years, you'll be pretty happy with prices falling below these levels, considering they're going up by a factor of 10 every time. So yeah, very interesting here. I like this documenting Bitcoin Twitter handle quite a bit.
Yes, indeed. So the moral of the story is just hodl. If math is serving me correct, every single Bitcoin hodler who has hodled for 4 years or longer should be in the green. There should be no losers, right? Because if 2017, at the rate that we're going up and just based on all the previous cycles, so just hodl for the long haul. And I'm looking multiple halvings ahead. I'm excited for the 2028 halving, fantasizing Bitcoin potentially getting close to 7 figures, especially with hyperinflation going on with fiat currencies around the world, as many of them are collapsing into the granddaddy Ponzi called the US dollar. And I feel it's only a matter of time before the US dollar collapses into Bitcoin. And I'm sure they're going to roll out the CBDCs, central bank digital currencies. And there's going to be people with self-sovereignty who hold Bitcoin, and there'll be the slave race with programmable money by central bankers that can program it to shut off if you have a conflicting political view, potentially. So stack sats now while you still can.
Absolutely, yeah. It's interesting, too. I mean, looking at the last 8 years, as you brought up the fact that people who waited up to 4 years, they have all had the opportunity to get in on a big bull cycle. You can see when people had their max trader pain. Back here in January 2015, for example, the 365-day trading returns were at negative 57%. If you buy in when other trading returns are that low, you're generally going to do quite well. If I hold down shift here and drag right, you can start to see the price returns and how much they immediately started to go up, all the way up until right here in December. So from the beginning to the end of 2015, you'd be up 155%. And that's just by using this MVRV metric. And then on the flip side, if you're getting in at the top, in December of 2017, when you can see that the average trading returns are up to plus 154%, and I hold down shift here, going down to the peak, you would have lost 76%. So it really is a lesson here about how important it is to buy when trader pain is at a max. And guess where we are now? We're pretty much in that same max area with 365-day average traders now back down below negative 40% on their returns. 30-day, a little more neutral right now at negative 1%, which makes sense. Bitcoin's up like a modest plus 2%, factor in a little bit of unoptimal FOMO and FUD going on, and we're slightly in the negative area for midterm traders. But overall, I mean, this yellow bar here, or area chart, really tells the story about where we're at, and there's a ton of trader pain. So yes, we can still experience more trader pain and perhaps go down to around here in the mid 50s, but don't count on, you know, getting the opportunity to wait until trader pain is down another 16%. Understand that right now you're in a historically great position, the third best position really in the past 8 years, to add on to your positions according to risk analysis.
I'm glad you brought that up, risk analysis. That's exactly what I think about, is the risk to reward. The risk right now, in my opinion, buying Bitcoin at 20,000 level is like the worst case scenario that I could fathom is like a $10,000 Bitcoin, as pointed out earlier by, Willy Woo. So the worst that can happen potentially is losing 50% of the value. But what's the best that can happen? Just returning to the all-time high of 69,000 is a 3.5x return on 20 grand. So it's just skewed in our favor to be building positions at a time like this when we're at this level that we were 5 years ago.
Exactly. Yeah, that's a really good way of putting it. And, another way we can understand where traders' heads are at right now, look at how flat the funding rate has been over the last 48 hours. The blue line here is the amount of longs versus shorts going on the average exchange. And you can see there were just slightly, people were slightly longing up until prices started dropping. You saw a big long here yesterday evening, fluctuated into the short range, then back into the long range. And then guess what happened? As soon as prices dropped off here from 5 a.m. to 6 a.m. Pacific time, where I'm at, this was a couple hours ago, suddenly everyone's shorting and going, oh, I guess prices can go down. I'm going to try to ride the train further down. And so far, if they shorted just for an hour and then quickly jump back up, great, they shorted successfully just slightly, but now we're already back above where prices were after the non-farming payroll came out. And that really is indicative of how reactionary the trading crowd is. They never are shorting before these big drops. They usually short right afterwards, hoping it's going to continue, and then get kind of effed when it doesn't go as they were expecting.
Right, which is always interesting.
Yeah. Another topic I wanted to bring up with you, JV, and feel free to add your opinion to it if you have some knowledge, but the BNB hack from yesterday, it's currently the covering the top 2 in our top 10 crypto trends right now in terms of showing the keywords that are seeing the highest increase percentage-wise in discussion.
Wow.
It's pretty clear that this has dominated headlines. And I'm curious what you believe will come from BNB and just the overall trust factor that people have in Binance, the world's leading exchange right now.
I'm glad you brought it up. I didn't research heavily enough about the hack. So correct me if I'm wrong, but was like 600 million just hacked, or a ridiculous number of BNB?
So I want to make sure to get the data right. According to readers, it was $570 million.
Wow.
And it would have been way worse had Binance not reacted quickly and basically frozen the entire Binance chain. But they were still able to pull out a pretty significant amount onto private addresses that
now,
can't really
this
be
new?
returned.
I don't recall previously any Binance big hacks like this. This seems to be like a
not
unicorn,
to this level. Yeah, there have been minor breaches here and there, but nothing close to 9 figures, if I'm not mistaken. And chat, feel free to correct if I'm wrong. But this was the biggest in Binance Chain's history. And the question right now is are things safe? can BNB Chain immediately begin to be trusted again? We can look at how much is being talked about right now. BNB in general, you can see the social dominance is at its highest in about a little over a month. So there have been other reasons where BNB has been talked about a lot. But in terms of like the word hack, if we put that up, you can see the social volume here has exploded, and it's the most discussed hack in 2 months. I can't remember what it was here, but there was some other hack that happened at the very beginning of August. But you can see the social dominance has absolutely exploded in terms of this keyword. Telegram, Reddit, and Twitter to a smaller extent, they're all talking about it quite a bit right now. So I find that interesting, and we're going to see just how much Binance can just quickly recover and move on from this. But according to this, they stole around 100 million of that 570 million. I'm trying to make sure I understand this correctly. Said in a blog post that a total of 2 million in BNB worth around 570 million was withdrawn by the hacker, but only 100 million was stolen. So I guess my understanding is they recovered 470 of the 570 million.
Okay. Well, I guess the next question is, was that whose crypto was it? I guess the exchange is wealthy, so they can cover that. So no one actually lost any money. Is that accurate?
That's my understanding, yes. I believe that nobody's wallets should actually see a net negative result from this. And this is a hit that is solely going toward Binance right now.
Right. So I would think that, I mean, I trust the Binance Smart Chain, and I trust the exchange because it's the biggest crypto exchange in the world. I think Changpeng Zhao is a great CEO. So I don't think this will necessarily destroy it unless they figured out some way to continuously hack, which I doubt, because I think they're smart enough to combat it. It's unfortunate that the hacker got away with 100 million, but these exchanges are worth billions upon billions of dollars. So hopefully everything settles down and it restores people's confidence. Right. But I have no clue what will happen. It's just unfortunate to hear about.
Yeah, and if there's any positive that comes from these hacks, and condolences to people who have been impacted by hacks before. But if there are positives that have come out, it's the fact that chains and exchanges and entities quickly learn how to protect themselves better with each oncoming hack to ensure that they can't happen again. And yes, hackers can be creative and find new ways, but progressively over time, the theory is that hacks have to get more and more elaborate and creative to have the same results that they had on the previous hack due to the learning of cryptocurrency entities over time and how to prevent them from continuing to happen.
Exactly. So it could be a learning experience for the entire community. I noticed this happening a lot. Usually hacks are with DeFi protocols. Like we were seeing DeFi lenders and such left and right being hacked. And it's just like, oh my God, to the point where you just question, are any of these things actually safe anymore? So it is scary. I understand the fear factor here.
100%. Yeah, and I think the one from a couple months ago, now that I think about it, I think it was the Curve hack, where there was like it happened in early August. So it basically, a hacker was able to use an alternate address for when people moved coins off of Curve and are about to withdraw them. That middle address before they withdraw to their own address was exploited and changed to someone's personal address. And Curve quite quickly was able to stop it before, hundreds and hundreds of millions were taken out, but it was still something around 570,000 when it could have been 100x that. Right. And because of that hack, Curve was able to quickly implement a safety measure to prevent that kind of exploit from ever happening again. It doesn't mean Curve can't be hacked in a new way, but this is an example of, a company being able to learn from their mistakes and find a way that they could have been exploited and make sure that that particular way can't happen again.
Right. So there's a positive for the whole industry there.
Exactly. Yeah, and just to get into some of the on-chain metrics, looking at something like Bitcoin right now and seeing where we're at, just to focus on kind of some context going into these final 3 months of 2022. We can see trading volume. It actually peaked at about a 3-month high just last week, and it's come back down again. I would imagine that it's going to start jumping up again with today's volatility. Obviously, it's still early in the morning here in the Pacific time zone, but usually about 2 to 4 hours from now, you'll start to see the cycles pick up. And we're going to see just how close trading volume comes to what it looked like 7 to 10 days ago here. Active addresses are fairly normal for now. We already touched on MVRV being historically low for the long term and about neutral for midterm. Funding rates, they went super short temporarily, and now they're back to neutral. Whale transactions, I wanted to look at this really quick. We can see that in mid-June there was that big spike, but not a lot of whale activity ever since. But here's the real interesting part. Let me make sure to move over to Bitcoin, because right now it's showing BUSD. So if we look at the 100 to 1,000 addresses, as well as the 1,000 to 10,000, we're looking at the past year. Let's look at the last 2 years. So this is really interesting, JV. We can see over time the key whales in crypto. Generally anywhere between 100 to 10,000 Bitcoin in their wallets. These are considered the whales who can really actively move the markets when they make a huge buy or a huge sell, and be basically the initial domino for traders to then react and pump up the price further or push the price down further. You can see here, they were really at a peak for at least the 1,000 to 10,000 back here in February 2021. This was a couple of months before the all-time high. But you can see how the tier underneath, 100 to 1,000, they were really, really accumulating hard going into this exponential rise. And just to make it easy, we'll remove these and merge them together. So now we're just going to look at 100 to 10,000 altogether. And this red line basically represents the entire percentage of supply held by these two tiers together. You can see the peak here, because the 100 to 1,000 was pushing up so far. They basically accumulated all the way up to 3 days before the then all-time high of, I think it got a little above 63K. They started to dump, and then as soon as the price fell off right here, and we went all the way back to 35K, what do you know? They're starting to accumulate again. Yes, they didn't accumulate at the perfect time. We had one more bottom where it got to about 30K, but even still, their accumulation continued all the way up until late October 2021. This was about 2 weeks before the 3.4K all-time high that occurred the second week of November. And they were already dumping 2 weeks prior to it and taking profit basically at this top. So yes, we had one more true top, which was the all-time high, but these accumulators were just fine, increasing their bags from here to here, and then watching the smaller traders get absolutely ruined by a much larger drop that really started here, had a slight rise here, and continued down here. And they've been dumping the entire way, at least up until right here, September 28th, where for the last 10 days, they've actually bought back about 0.19% of Bitcoin supply, which is an accumulation of about 0.42% of their bags. So that's a nice modest jump. We're just going to have to see if this is fool's gold or if it's the start of a much longer term accumulation that can look like this. And you can see just how much their accumulation has an impact positively on the price, and vice versa. Their dumping has a huge negative impact on the price.
And this is an excellent metric. They say follow the money. Obviously, the whales are the money.
Oh, yeah.
They have a good, synopsis of what's going on in the markets. They seem to be ahead of retail and, other investors. So I like this. Follow what the whales are doing, and gives us insight to what we should probably be doing. We should be moving like a whale versus like the rest of the retail traders out there. If the whales are accumulating, I want to know why, because I should probably be accumulating too,
Absolutely. It's never a bad idea to somewhat from an educational strategy, follow what the whales are doing. And of course, as JB said, figure out exactly why they're doing it. But in general, even if you don't know why they're doing it, and you're just making trades based on what the whales are doing, you're generally going to come out on top if you have enough patience and you're not watching day by day, more like week by week, so that you don't, get frustrated when they start to dump and then prices keep going up for 1 or 2 more weeks. In general, this is a very viable long-term strategy to be in and out based on how much these key addresses are jumping in and jumping out themselves.
Exactly. And for a little context, like Plan B, the stock to flow creator, he only did 3 Bitcoin buys in his life. He made his first when Bitcoin was $400 in 2015. That was the year before the 2016 halving. Then in 2018, 3 years later, Bitcoin 10x at 4,000, he made another large purchase. And then just recently in 2022, he announced on Twitter maybe a week or 2 ago that he just made his third big Bitcoin purchase at around $20,000. So
how many weeks ago? Sorry.
More recently, I wouldn't guess 2 weeks ago, but more recently, he did a post saying this was his third Bitcoin purchase. I may have sent you one of the links in the messages earlier, but I thought that says a lot, that people like him are extremely bullish during these times. Plan B has a lot of good insights in there.
Oh, yeah. Yeah, we're definitely fans of him, and I mean his following really says it all. 1.8 million people are interested in what he has to say here, and I love the just like Willy Woo, he has a lot of very interesting data that thinks outside the box and no one else really has on their radar.
Exactly. So note, I would imagine he's a whale. So whales are accumulating. It doesn't necessarily mean you should accumulate right now, but it's not necessarily a bad idea if you believe in the underlying asset and you're going to be in it for the long haul. You're not looking to make a quick buck and get rich tomorrow, which I know a lot of you are. So
exactly. Yeah, we'll see if this line here goes below where it bottomed out here on the 27th, 45.61%. It's back up to 45.8. Still a far cry from the 2-year high of 49.5%, but let's see where it goes. If they start to accumulate, the 4% or so that they've dumped over the past year, I'd say that's a pretty solid sign. So we'll have to wait and see. In terms of anything else that we can report on Bitcoin, not a lot of dormant movement. JV, generally what this line does is it tells us the average age in which investments have been sitting in the same address. And when the line moves down, that means dormant coins are moving and circulating throughout the network. If the line continues to rise, it means they're kind of those investments are sitting in the same addresses and essentially collecting cobwebs, not having the kind of healthy utility that we would be hoping for to spark another Bitcoin bull run.
Right.
So yeah, this has been
I have a question for you. Because you're the on-chain expert. How many Bitcoin have been dormant and haven't moved for like at least the full cycle, like 4-year period?
Yeah, that's a good question. I don't think we have quite that exact number on hand, but we can see how many are circulating in any given time. So if we switch this to like 7 days, we can see when the spikes are. Let me overlay price here, just so we have some context. So this is our 7-day dormant circulation. Generally, you're going to see the most dormant circulation come to life when there's a big peak or a big valley in prices. So for example, this one, we had a huge dormant circulation spike where 191K were moved in the very beginning of the year, and this basically stopped the rally that was occurring in 2021 temporarily. And then, we see another one here. This was a very small top. And then look, this one here was really the last big one here in mid-June, where we had 2 straight weeks of a little over 120K Bitcoin of dormant tokens being moved. And it marked the bottom, really. Prices really rose from there. Obviously, they came back down, and we're kind of around that same level now. But these are the kind of spikes that you can look at and say, okay, there's some serious dormant tokens being moved. It's likely going to cause at least a temporary turnaround on the price. And that's what a lot of our on-chain metrics do, is they mark volatility. And as soon as a big spike occurs, generally if prices are moving down, the volatility marker causes prices to suddenly reverse and go up, or vice versa. If prices have been climbing and then you suddenly see a big spike, that marks the top and prices start to move down.
Makes sense. Excellent data once again, man. Appreciate you sharing.
Yeah, really, it's a really good question, and something we always try to keep an eye on. So as soon as this curve starts to flatten, that's when we want to start paying attention and say, okay, there's some older tokens that are finally starting to be moved. It can often be a sign of capitulation if it's been during a long bear market, or it's a sign that these older tokens are finally starting to take profit on a huge rise. So if we look at the last 8 years again, you can clearly see the cycles of when the dormant tokens start to move, like they did in late 2016, and then the big bull market starts. You can see that it flattens out here and starts to move up right at the peak. This was the bull run that you and I, JV, were paying attention to in 2017. Right. And then prices immediately start going down as the tokens get dormant again, up until right here in October 2020. This was maybe 6 months after Black Thursday hit, and prices were already starting to rise. But as soon as these dormant tokens started to move, yeah, that's when we absolutely blasted off and saw that then all-time high in April. And then this one arguably was a bit of fool's gold, even though it was 6-7 months after the April all-time high. Dormant tokens were already starting to climb again, and things were getting stagnant when this one hit. So obviously whales were still accumulating up until October here, but you would have been just fine following this mean dollar invested age line and taking profit while the dormant tokens were plateauing and starting to go up again.
Makes sense.
And yeah, just to give the chat an opportunity, what we like to do, JV, is for the last usually 20 minutes or so, we'll allow the chat to give a request on which altcoins might be interesting to check out on stream. And so if there are any recommendations, we can cover one or two really quickly. And JV, that includes you. So if there are any altcoins that you may be interested in checking out, we can get into that as well and see what's going on the on-chain and social end for them.
Sounds good. I'll give everyone an opportunity to ask for their favorite alts.
Yeah, based on our chat, I mean, we'll give you guys about 15, 20 seconds or so to respond. Otherwise, I've got a few we can check out, and JV probably does as well. I can show you guys this in the meantime as well. Bitcoin circulation, still showing a bear signal, at least through the first week of October. We've got a third month of red going on. Generally, JV, when we see a lot of red, that means there is not enough unique tokens moving from address to address to justify a price rise. You can see when things are green, prices generally move up. When circulation is red compared to market cap, prices tend to move down, as we can see here and here very clearly. And then you can see here, when it turned green, prices absolutely soared. Now, this was the anomaly, right? Because prices were moving down despite the semi-bullish and bullish divergences. But a lot of that can be attributed to the unprecedented CPI reports and the inflation concerns and the recession that was going on and the close tie that crypto has to equities right now. So I just wanted to show that. And then Ethereum was looking better during its merge month last month, but you can see now circulation has quickly dried up, and Ethereum's overall divergence is not looking wonderful at the moment. So despite a lot of encouraging signs that JV and I have talked about, please be mindful of the fact that there are some concerns still regarding circulation, daily active addresses, and things like that.
Right. Yeah, the ETH merge, man. I mean, I guess everyone expects it to be bullish. It's the biggest update of the crypto ecosystem since the previous Bitcoin hard fork. But then it crashes, you know. Did we hit like $900 Ethereum or something? It went low at one point, or was that pre-merge?
It was before, yeah. So like I think in August is when it bottomed out around 900-ish, but it did drop from around 1,500 to the low 12s, I believe, at the bottom after the merge happened. And a lot of people are now saying, well, you know, we were wrong about the merge. It was actually a bearish event. I wouldn't necessarily say that's true. It's a matter of time frame, really. If you think that a merge should immediately make, you know, an asset 2x, you're probably being a little impatient. And even now, it's been less than a month since it's happened. It's only been 3 weeks. And prices have recovered a little bit since the initial drop. It's still below where it was in the 1,500 level just prior to the merge. But, you know, if you give it a few months and we're suddenly above, those people who said the merge was not a success might quickly change their tune.
Right. So got to give it some time over the long haul, see what it does. It is interesting, though. Maybe that the pre-merge was obviously priced in because we did have that run up at one point where Ethereum, I don't remember earlier in the year, but Ethereum did a nice run up at some point. And I was like, interesting. And so maybe all that was priced in and then we crash after because it was already priced in and we were all expecting it to change. But my guess.
Yeah, no, I think that's a good way of looking at it for sure. And one of our great community members, B Park, recommended PYR. So I'm gonna jump into this really quick and just show him a few of the key metrics for the sake of time, and then maybe JV, you can give one to close out our stream, which will be ending in about 10 minutes or so here. But to begin with PYR. Looking at a few of the key metrics, we're looking at the past year of data. We can see the trading volume is starting to creep up again. It was very, very silent for the majority of June, all the way up until the end of August. And then we started to see some pretty notable climbs in trading volume. We can see the transaction volume, both in PYR and in USD, has had a few spikes. But nothing notable here. We do see, you know, since about the 23rd, the price is up 41.5%. So that's significant for sure. Let's see what else is coming from this. Daily active addresses up a little bit. Nothing to be too excited about. You can see in previous cycles, just like we've talked about with these on-chain markers being kind of price reversal indicators. This one here in early July, this marked the bottom. This one here didn't really have much of an impact. It was continuing to go down. But since here, it looks like a pretty organic growth for daily active addresses. Nothing like a huge spike like we saw here, which marked the top. So I'd be pretty confident that this PYR rally can continue as long as, of course, Bitcoin can stay stable and not drop off a cliff like it did earlier this morning. Looking at MVRV, which is of course very important. Let's extend this axis a little, 1.5. Okay, so the 30-day MVRV right now is actually quite high at plus 26%. This is a concern. You can see that the tops in previous cycles occurred at about 38%. And 50%. PYR is, of course, more of a small cap asset. It's like a 170 market cap rank or so. asset. So it can have some pretty serious swings, but I would be very concerned about the fact that we are above 20% right now on the 30-day average trading return scale right now. And then on the other hand, the long-term trading returns are still very low. So one has to give. We may, in all likelihood, see some minor correction in the next few days for PYR to get the 30-day MVRV back close to neutral. And then long-term, the 365-day MVRV can continue to push the price back up until it gets back up to neutral. So I'd say midterm and short-term, concerning based on trading returns, but long-term looking pretty decent. Not a lot of whale transactions. The last time we really saw a big spike was here in early April, and that marked the top. So watch out if there's a sudden huge spike in whale transactions. Even these minor ones here, these marked a local top. For now, though, it's staying pretty dormant. We had $1 million plus transaction on PYR in the last 24 hours. That's not anything too concerning at the moment. And let's see if there's anything going on with whales here. So PYR is currently priced at about $4.50. That would mean that most of the whales are going to be in this area and perhaps, yeah, just these two. So collectively, the 10K to 1 million holders, they have been accumulating pretty steadily since the beginning of the year here, where they were holding 4.96% then and up to 8.88% now, which is pretty significant. And if we overlay the price on it, so this is the price of PYR in Bitcoin, we can see that as they started to accumulate, especially here, so the price bottomed in mid-May, but they started accumulating in mid-June. And since this accumulation right here, if I drag over, they have added about almost 50% to their bags, and the price has gone up 49%. That's not a coincidence, folks. I think that's very telling over the fact that these key whales holding anywhere between about $500,000 to $50 million in PYR, they're starting to get close to 10% again, and that could be a very promising sign. So I like this news for PYR. Mean dollar invested age. Let's zoom out here really quick. Yeah, nothing really going on in terms of dormant movement. Network realized profit loss. If we zoom in, there was a very small spike up. So there was some realized profit here, and that did mark a local top temporarily, but it's nothing too significant. You can see the big realized loss mark happened back here on the 21st, and just about, yeah, less than a day later, that was the local bottom. Since this realized profit mark, even taking into account the top that occurred right afterwards, price is up 37% since. So that's a pretty strong argument as to why this mattered a lot in terms of being a metric with some alpha to tell you when to get in on PYR. Supply on exchanges, it's fairly high for PYR at about 14%, but it has started to creep a little bit lower. Nothing significant. I'm a little concerned about an asset that has over 10% of its coins on exchanges. So just be wary that there could be a future sell-off that really knocks down the price in a hurry. Social volume and dominance, it looks like it's largely ignored right now. Not a lot to say. That's a good sign. Weighted sentiment, however, is very high for PYR. So there is a decent amount of FOMO going on at the moment. Not to the level that we saw way back here in October 21 and November 2021, but be a little concerned as the crowd is getting a little bit of FOMO. And that's it for PYR. That was a really, really good asset request, B Park, not one that I've ever looked at before, so appreciate that. And just with our last 5 minutes here, JV, do you have any assets, particularly if it's an ERC20, that you may want us to check out?
Is Chainlink considered ERC? I'm not sure.
Absolutely. Yep.
Yeah, Chainlink, let's check that one out. That one I got a big position in back in 2019. I just been hodling. I know it went up to $50 plus, and right now it's like extremely low. So I'm interested to see what the charts say here.
Totally. Yeah. Beginning with trading volume, it looks like it's fairly stagnant. Nothing too much to say there. So we'll go breeze on by that one. Daily active addresses, we did see a recent rise. It's not a significant enough one for us to be very excited, but it at least tells us that people are paying attention. I do remember, I think it was around early September, Chainlink was really starting to separate from Bitcoin a little bit. And it didn't really get a lot of recognition until more recently here, about 2 weeks ago, we started to see some pretty heavy active addresses. I wouldn't say there's too much to be excited about. The last major milestone occurred in late June, and this was right at the bottom for Chainlink, where it had a huge circulation spike, you can see from this red bar, and then a daily active address spike. These were both basically the largest since the opening week of 2022. So that's what we'll be looking for as a sign of a breakout potentially coming for Link. For now, it's fairly dormant. As far as MVRV goes, we can see that it's actually very flat, both for 30 and 365 days. I'd be a little concerned actually with the 365-day MVRV being neutral right now, where most other assets, they're at least in the negative 15% or more range. It means that the long-term traders have sort of caught up in terms of Chainlink's returns. And the price can now go really either way. And it's been kind of roller coastering in a very tight range ever since. So be a little concerned about the fact that the MVRV isn't looking as intriguing for Link as it does for the average altcoin right now.
Good to know.
Yeah, definitely. In terms of funding rate, it looks like just slightly in the positive, but nothing too crazy, not a huge amount of longs compared to shorts or shorts compared to longs. Whale transactions, we saw a bit of an uptick in the end of September, and it did look like a profit-taking spike. Just like these were big profit-taking spikes where there were a ton of huge transactions occurring at that top. And even back here in November of 2021, the largest whale transaction spike occurred the day that it hit its at least 1 year high here. So that's something to be very to keep on your radar for sure. And vice versa, in December, this happened at a local bottom and prices immediately started to rise. So pay very close attention if there's a huge whale transaction spike, particularly for Chainlink. There's a lot of alpha based on what the big traders are doing there. Prices are at 750-ish right now, so whales are going to be about the same at 10,000 up to 1 million coin hodlers. I shouldn't have X'd that out. Let me bring it back. So let's get this in green. So here's the price in Bitcoin versus the amount of accumulation or dumping going on by the key whales. And it looks like the key whales have been on an absolute tear in terms of accumulation going all the way back to February. If I drag from here, we can see that they added about 22% more Chainlink to their stacks here in the last 7.5 months or so. That's pretty significant, 3.1% of all of the supply being added to these key whales. And the price has been going up, particularly since late May when they really started to get aggressive with their accumulation. And they're hanging on. They have not really shown any signs of dumping at all. And compared to last year, they own almost 3% more of the Chainlink supply. That's a very positive sign. We can even back it out 2018. And we can see the dumping that occurred going into the rise in mid-2020. And then they started to accumulate pretty heavily, I mean, really going all the way back to October 2020, which is sort of the opposite of what's going on with Bitcoin right now. The Bitcoin whales all started taking profit around here, and they've been moving down. But look at how Chainlink stayed flat and then really started to roar upwards over the past 4 to 5 months or so. So very positive sign for the whales. That probably is as bullish of a sign as you can see to counteract the bearish sign that is a more neutral MVRV for Chainlink right now. Not much going on in terms of profit versus loss ratio, fairly dormant. The amount of older investments are staying pretty flat right now. Network realized profit loss, nothing too special. Supply and exchanges, it looks like, yeah, so it's a little concerning with Chainlink's supply and exchanges up around 18%. It's really risen a couple more percentage points since July. We'd rather see that go down to imply that there is less risk of a future sell-off. But for now, yeah, it's a pretty high amount of supply of Link on exchanges right now compared to other alts. Social volume and dominance, fairly neutral right now. The big spike occurred in late July. If we zoom in here, yeah, we see that the dominance spike actually occurred right at the bottom, and then it really roared up afterwards. So when you see Chainlink's volume and dominance start to go high, pay attention to what direction the price is moving, because it's very likely going to cause a 180 to occur for the price. For now, though, it's staying low. And then finally, weighted sentiment is neutral for the moment, not a huge ratio of positive commentary or negative commentary coming in. So that's obviously a neutral signal for now. Development activity is continuing to look pretty good. This should be interesting for you, JV. The amount of notable GitHub submissions over time. Ignore this huge drop. That just means that it's covering the current day, so it doesn't have a huge amount of development activity recorded yet. But over time, this is what you want to see from your assets. You want to see the amount of GitHub submissions continuing to move up over time instead of down, as an indication that the coders, the people that are responsible for the innovation and improvement of an asset, they are believers in the asset, and they are genuinely trying to improve it and make it successful and keep up with the times and the demand for fast blockchain transactions. So Chainlink's development activity has looked great since its inception back in 2017.
Good stuff, man.
I mean, you can compare it to something like Dogecoin, for example. And regardless of your take or anyone else's take on Dogecoin, what you can't deny is they don't have a lot of development activity. You can see that there have been various spikes here, but if you zoom into like the last year, and if you check out the box that's showing in the top left of my screen, the amount of submissions going on right now per day, it's zero often, less than 1, and Chainlink's was up around like 30 for comparison. Ethereum's is often up around over 300, sometimes even over 400 per day. So that gives you a little contrast into how different many of these coins are in terms of their coders and how much they're trying to innovate, which is a very good long-term indicator for a coin's success historically. So
apparently Doge don't need innovation. It has Elon. So Elon bought Twitter, which he says he can just force everyone to purchase Doge to confirm their account or something, and it will go.
Exactly. Elon is the innovation, right?
Yeah.
Yeah, so I mean that's a perfect example. Some coins fluctuate more based on what its latest utility improvements are over time, and others can fluctuate just based on sentiment alone. And Dogecoin is certainly in that latter category.
Great insights, man. I appreciate all this, Brian.
Yeah, I appreciate you, man. This has been a lot of fun, and I would love to do it again as some more, interesting news comes out throughout the final 3 months of 2022 here.
Yeah, absolutely. And excited to have you on my show as well to share some of these on-chain metrics.
For sure. Yeah. Stay tuned for that, folks. I'll be joining Crypto News Alerts on his channel in the near future, and we'll go over some of our metrics there. And I hope you can join for that. We'll give you a little heads up on when that is. And in the meantime, folks, I hope you all stay safe. A special thanks to JV for his hour and a half of time. This has been a real treat for all of us. And like I said, you're welcome on this show anytime in the future.
Appreciate it. Everyone, make it a great day.
All right, y'all. Stay safe. Enjoy your weekends, and we will be talking to you next week.